This leader is provided to permit the projectionist to complete adjustment of focus and sound level before the film begins.
Let's try this one again. Let's try this again. What's going on? What's going on? Just some guy. How's it going? Good to see you. Deanna, good to see you. Stacy F, what's going on? Happy Saturday. A couple things here in the background. I think it's just YouTube today. Just heads up that it's not on. Can someone say something inside of the inside of Discord that I can't do a private show? I don't think. Maybe I can, but I don't think that. And this is chat is open to everyone, so you do not need to be. Well, almost everybody. You have to subscribe, I think, on YouTube. Let me just make sure. I got to keep out the Russian bots. Outside of that, though, everyone can chat today. So if you are just showing up, sort by newest. Just subscribers. Any duration. Save. This is an update video. We had a video, I think 2 Sundays ago, on does the market have the potential to roll over? And it did, right? It came down to the daily trigger. Say hello to everybody real quick. Let everybody get in here. It's going to the full chart here. I kind of video is... Let's say, let me go back to the talking directly to viewers. There we go. Is that Chad Wilson or is that Chaz? I don't know. If that's Chaz, what up, Chaz? Hey, Chad Wilson, if you're someone different. Just some guy was saying second. Deanna was here. Stacy, Kim Hill, Dustin Bailey. What's going on? Day's going great. I'm spent the morning. What did I do this morning? I got up early and went and bought a table for tabletop RPG gaming for my daughters. We're getting back into the school season, and we have a spare room nothing's going on in, so I bought a huge dining room table, and I'm going to rebuild it with for tabletop games. They play them, but they don't play them as much. But I'm trying to get them away from gaming on the computers and Xboxes and that kind of stuff. So we're gonna level up this fall and winter. So we're like building a recessed play area and then extending the table out around. Should be like 8 feet by 6 feet or something like that. It's kind of big for them and their friends. So I got that table this morning. Now my wife and children are off vacation, not quite vacation, just a day vacation. They took a trip across the state to some of my daughter's friends for a big birthday party, and I was like, I got too much going on with these guys. Everybody's wondering and worrying and all that kind of stuff. So I hope you're all having a great weekend. Hi, Kim. How are you? Hope everybody's having a great weekend. Hope you're able to get away from the market. I know it can be a challenge. Funnily enough, Thursday and Friday I was busy, and that'll bring up a topic of conversation. As I did not see the close on Thursday, I wish I had, and I didn't look closely. And the crazy part was I bought calls on the close without scaling back a little bit. I should not have, but I did. So we'll talk about that at some point as well. Kim, how are you? Dustin Bailey, Ash, saying, "Oh yeah, boy." Who else is out there? Happy weekend to you too, John Haggerty. Good to see you. Probably for days. It's kind of funny. Pinky, what's going on, brother? Peter Kim, good to see you. You are different than Chaz. All right, cool. Some random hacker on Discord. Right on. Duncan, how are you? We play. I haven't done Pathfinder and a bunch of other games. We do other games, but they're young, so they still love Dungeons and Dragons. Of course, I haven't told them that Wizards and Hasbro's evil, of course, but we're not quite there yet. So they still play Dungeons and Dragons mainly. But we do all kinds of role-playing games. I'm like an old school gamer, so we'll sometimes just make up games. I do that too. We keep the rules simple. We have to do a lot of role play and story making. I don't know if it's storytelling. When winter comes here, it can get really dreary. So we try to have some kind of a filler for them through the winter. And I think this winter is going to be like, okay, we're going big time now. Now, what do we got here? It's kind of funny too. You having a problem hearing me right now? I'm having some issues. I am having issues. Adrenaline glands are. It might just be you. I have a computer, or Windows 11's a challenge. It just overruns anything you want to do. It's just like, fuck you, we're doing whatever we want. We're just going to update this thing, and we're going to reset everything. It does it now every month or so. So Windows 10 is a little bit, I'm considering going back to Windows 10. Yeah, you're welcome. You've got some friends that are professionals? Right on. So audio is still good? Right on. Do I ever do True Dungeon at Gen Con? Would you love it? You would love it? Yeah, I don't, sometimes we go to cons and stuff. I was big into it when I was a kid, and then I got away from it. And then I got back into it 5 years ago, maybe 3 or 5 years ago. And mostly I want my kids to have that same joy that I had when I was a kid. I'd make comic books and write books, and not really books. I think more comic books. I would draw and write the stories with one of my best friends. And matter of fact, we're still friends to this day. I've been friends with this now man since we were pre-teenage boys. It's kind of funny. It says here we only have 52 viewers. And what fascinatingly enough, we only had, I think, 50 or 70 viewers 2 Sundays ago. And that video was kept unlisted, and it actually blew up. And I think it's got at least a couple thousand views now, even more. So you're here for the second part of that video. And it's good to see those of you that are here, because I can see that this market matters to you. And that you don't come back to it later or after it comes true and that kind of stuff. So we'll get this show started now. So John's in the chat right now. Let me see if I can do that right now. Hang tight. Where's John? Oh, there's John Lynch. Hold on here. I'll do that right now. Give me a second here. So I'm going to make him a managing moderator. So, John, you've got a little bit more power than the moderators that are there. Just a heads up to that, so don't be fucking hitting buttons. If you ever jump on Twitch, I'll make you one there as well. Yeah, and I do with my kids too. So there's a part of this where they're reading and writing, they're being creative. Then we make art or crafts together. So we'll build 3-dimensional scenes, and we'll paint miniatures, and we use some good graphing skills and stuff like that. And then, but the cool part about this is they're able to use their imaginations and open up their world, their world of imagination and fantasy. And even myself, as I get older, I notice that I lose some of that. As I'm getting older, I'm losing that ability to dream and fantasize and have all of these crazy, wacky thoughts. It's like something about this is similar to Mad Libs. If you've ever played Mad Libs, very simple game where you fill in the blanks and you start to tell a story, right? And when you tell that story, it's kind of funny, and you're rolling off with tears rolling out of your eyes. None of these words are fit, and of course, it brings images into your mind that you are not normal, right? Like I have tomato toes or something. So little tomatoes on my toes, and it kind of triggers the mind into thinking about situations and actions and just descriptions of things that are kind of weird. So just trying to keep their minds going like that. That's kind of an important thing for a kid or for children. So I did mod John L. Let's see what we got here. What are the books behind me? I've got a bunch of them. They're mostly books that I've read that have to do with trading. The ones this year that I thought were most important was Hedge Fund Market Wizards. That book talks a lot about being able to see a major bottom in the stock market and the players in that. Then another one is The Education of a Speculator over here, and that's a famous trader who causes a lot of strife amongst professional traders. Either really like him or really hate him, and he's very honest in his life. He wears his career on his sleeve and doesn't make any bones about it. So it gives in matter of fact, he's still alive and he's active on Twitter, Niederhofer, and he's actually posts every day. He's an active poster on FinTwit to this day. He doesn't have a ton of followers anymore. He's grown a lot this year. He went from I push him all the time on Twitter. But he's got a great market insight, and a lot of the market has to still relies upon guys like that. The guys like that have made fortunes and lost them and made them again. So he gives great perspective on being an honest trader. A lot of today, we miss some of that today in the markets. There's a veil over the markets that everyone is perfect, and guys like him are not. And never tried to be publicly. I've got some other books back here. I've got this one here I read for writing algorithms and stuff. I wanted to give this away because I've read it already, and I think I went as deep as I could in it. It's an expensive book too. So, and as a matter of fact, I still owe I paid one. Whoop, hold on here. I paid one. Someone won a challenge or something. I paid one guy, and then I was like, "No, don't both of you." Still haven't sent. I got to send this last gift out here. So yeah, probably I'll do that today or Monday. So make sure I get that out to somebody. I promised I would give that book away, and I haven't yet. So maybe we'll do the next challenge for that book there. If anyone's interested in pathways, neural pathways, in the 1960s and 1970s, mathematicians were trying to develop. This was the computers are coming online, and scientists were trying to figure out how to relay information amongst blind people and deaf people, so that they could have um, adaptive devices that would be able to transmit information. And a lot of those math equations were then picked up by Wall Street, and um, that's how we actually got indicators like the RSI indicator. Indicators like that came out in VWAP. All these things started to be developed and came out in the 70s and 80s on Wall Street. Then they were sold to the general public in the late 80s, early 90s. And matter of fact, a lot of that base research is now being used for AI today. AI, it's kind of like the foundational aspects of AI and machine learning and stuff like that. So, yeah, good to see everybody here. Okay. Group called D&D in a Castle. They put together professional gyms and castles. I did the inaugural one in France. It was a blast. That sounds like a blast. Oh, no way. I didn't know that he was live streaming right now. Maybe we'll end the live stream and come back later. I had no idea. I made this plan. I don't know. I made plans to do this, I think, yesterday. I think I told the admins yesterday at some point. It's on private admin Discord that we have. So I had no idea that he was live streaming. And congratulations to him. I love Brian Watt. Guy's awesome. Yeah, discussing NQ day trades. Right on. I love Brian Watt, by the way. He's, a matter of fact, I'm a student of his. I spent years watching his live streams day in, day out. Guy is amazing. So we're going to talk about and this update here as to what's going on in the marketplace. We're going to continue on here. It's because I'm sure people are going to watch this later and be like, the first 45 minutes is just bullshitting. Yeah, I feel bad now. Like, I kind of feel bad. Like, maybe I should end the live stream and come back later or something, because I don't want to take away from him live streaming. He's like the GOAT, right? And if anything, you should watch him and come back here and then watch my weekend broadcast here. I feel like I owe you guys this. So here we go. I'm going to get through it really quick. Try to get this done as fast. I actually have another meeting too with John L. and someone else after this broadcast, but I feel like I owe you this. As we had this little private live stream last week, and we talked about 2 weeks ago on a Sunday or something like that. So let's see where we are on the charts here. This is Friday, right? Thursday, Wednesday, Tuesday, Monday, and then we had Friday, Thursday, Wednesday, Tuesday, Monday. So right in here, right up in here. Right up in here somewhere, we did a live stream and said, don't be surprised if you wake up on next week, week after, or even any time coming up and as we start to hit the top, to expect a pullback. And it can get violent as the general gist is it can get violent as we move up to all-time highs. Now we did bounce off of the daily trigger here and held the daily trigger quite nicely until Thursday. But I want to talk to you guys about Thursday. And we had that squeeze on Thursday. So I had a bunch of calls here that I'd bought. On this close right here, I'd bought a bunch of calls for Thursday. I think for Friday and for next week or something like that. Took a bunch of money off the table for Friday here. As we came up here, I was on stream with you as I took the money and ran up in here, and I was like, yeah, when we come back down to this hourly trigger, buy that dip, right? You want to be buying that hourly trigger down here. Hourly was curled up too. As a matter of fact, just looking back on it right here, you can actually see what the candle that it happened on. It's a 30-minute chart right now, and you could see a nice, beautiful trade higher. You have the hourly trading up. Came back down, and actually we had an initial bounce right here on this candle, but then we sold and broke through the hourly trigger. As soon as that happened, all bets were off. When we have trades on the hourly trigger, as a bull, you're looking for that bounce. So 30-minute candles, any bounces off, or any kind of like rip take off on the hourly trigger, daily trigger, 1 minute, 5 minute, all those things, they're great. That you make great money off of them. But you are looking for that confirmation off of that hourly for continuation to the upside to begin to get bullish. So you're not actually bullish here, right? You don't actually get bullish, and we harp on specifically the past 3 or 4 weeks. I've been trying to bring this up to people. We call it a kiss trade. It's called a kiss trade, but what you're looking for is this confirmation trade on the hourly trigger to get actually bullish for continuation of the upside. And this is actually when a takeoff becomes bullish. So the initial squeeze, not bullish. Great way to make money, but if you're like, hey, I've got a bullish thesis to the upside, and it's been confirmed, this would be the trade. And you don't even have to enter this until way later on up here. And not having that on Thursday's close was a key signal that we would lose the daily trigger up here. And on a 30-minute chart specifically, I don't like to see closing, never like to see closing candles. Just like down in here, don't like to see them. And on Friday, things got even nastier. On Friday, we actually lost the daily trigger. So we lost it on Thursday, confirmed the loss on the close on Thursday. And I actually bought, I can't remember, I think it was Friday. I ended up buying a bunch of not Thursday, on Thursday, on this close right here, I wound up buying more calls for next Friday. I think there were 13 cents or something like that for next Friday to go up. And then I didn't pay attention to the charts on Friday. Had I paid it much, I got here on Friday actually in the stream. I was able to get on and type some stuff into you guys, and I was like, yeah, they're going to squeeze this up into this close. They held it down into the close instead, but we should be going up on Monday, but not for long. I'm not expecting it to go up for long. I'm going to walk around the market and show you guys the thought process here. And we're at an inflection point, a true inflection point in the market right now. We're on a cusp of being dragged down to that 428, 432. So the market needs to reverse quickly. Now, there are some sectors saying we are going to reverse to the upside, and there are some sectors that are saying no. We have some gaps still to close below. I think at 443.20 and 422.86, somewhere in there was a gap way, way, way back from last year that still hasn't been closed. Or I think we hit one of the two, but not the second one on the downside on SPY. But for right now, that Thursday and Friday was not what you want to see. You do not want to see the daily trend rolling over, which is what we're seeing right now. And I would expect any up move on Monday, if there's any kind of squeeze, to get sold down. And we're eventually going to, or likely going to go down and trade that weekly trigger. And that is down here at, let me put a little box down here. Next week will be roughly this 428 to 432, somewhere in here the next 2 weeks that it takes to hit this. So we are looking to trade. At this point, we've lost the daily trigger. This is a signpost for the market. And I do expect us to have an up day on Monday. And unless you start seeing some real recovery, like if you're a bull out there, right, and you're like, hey, we're probably going to close that small gap. We're going to head higher from their cap. There's no worries here. The only thing that I would say to you would be that on Monday, now you have to not only regain 447.73 on Monday, but then you must bounce off the hourly, confirm the hourly to go higher. So bulls have a ton of work here. They have to regain this. Let's make this yellow here. Well, the work bulls have is no joke here. Talking about that yellow line right there, you're talking about this green line having to come up as well. And you have to break above it with price, come back down, likely test both of these twice, and then start to make your way higher. Is it possible? It is possible. But as time is passing here, bulls are not showing the will to do this. You saw economic news come out that was not negative. And no matter what you say, it's not negative enough to drop the market. Market is still staircasing down. You're also noticing sentiment in the marketplace right now is starting to wane to the downside. Even if they see it publicly, you can see it on Twitter, see it on all the news stations. That there's a little bit of skepticism here, and I'm seeing that. And most of this isn't this sentiment isn't from retailers. The sentiment is from banks telling you, maybe you should start looking at all these nice stocks over here, like Walmarts and shit. And I'm like, man, this isn't good. You don't want to see retailers take that sentiment on, which they're going to if it's being fed to you. So there is a sentiment shift, which I believe a lot in sentiment out there that maybe we're not going any higher. Now the bulls aren't out of this yet, so we're going to talk about that right now. But I do want to give you an update that for right now, we're at an inflection point in the market. Daily velocity is coming down to the 0 line right now, and sometimes we'll break below it. We'll go like -5, -10, and then you'll get your bounce up. And I'm going to talk to you about how that can happen in a moment here. But right now we're at a neutral point in the market. Even though we've broken the daily trigger, this thing is is a forward indicator, a forward-looking indicator, not a lagging indicator, and it's starting to say, you know what? We broke the daily trigger. We are going to begin to look to the downside, and VIX is kind of telling us that same thing. VIX is drawing that same kind of a picture. Now, the idea here, the expectation here is that on Monday we're going to squeeze higher and actually reject and confirm that move lower. If we begin to do a rejection trade here, you're going to be looking out to the downside. Now, just like bulls, right, I want to show you this here. Just like bulls right here, this is a key point for bears, okay? And I tell bulls this all the time, and I want to explain this to you just like I explained it a moment ago. When we come up, when price comes up, right, you're looking for that confirmation on the hourly for true bullishness. Right here's true bullishness, right? Confirm on the hourly. Has not happened once in any of this consolidation here. And bears are looking for that same confirmation to the downside. It's not good enough that you break down over here. Let me change this to a red. So if you're a bear and you're like watching this and you're like, oh, hell yeah, let's go to the depths of hell. It's still not done yet, right? So you can't, this isn't going to work here. You need to have one more squeeze up here and just be saying, yes, we're going down, okay? So if you're a bear out there, you are looking on Monday or at some point Monday, Tuesday for some kind of a test at 447. We're going to go with 447 flat, okay? So you're going to be looking, bears are looking for hard rejection. Let me see if I can draw that in for you. A hard rejection down here at about 447 flat, right here. Bears are definitely going to be looking for that. Let's see if I can get that in there. Bears are definitely looking for some kind of a rejection here on Monday for that downside move. And I would expect I'm going to expect at that point that we are going to target down here to that 432. We'll talk about that right now. If we get that rejection, what to do, that kind of stuff. Is the run all over? Is the bull run all over at that point? It's possible that it would be. It's possible if we trade that 432, even if we stay in trend, that the actual bull run might be over for that target of failing all-time highs into September, and then the 480 for New Year's, and then the eventual rollover in February. So inflection point time right here, right? This is kind of like stating inflection points in the market. None of this is inflection point here. This now is confirmed inflection point. If we begin to trade down here to this 432, we're going to get over into the JPM collar really quick and take a peek at this. And I'm going to explain the rest of this to you right now. I want to show you the idea here behind if we are going to have continuation to the upside in this bull run or not, right? We've got the danger, or we've got the, hey, danger ahead is coming. Don't be surprised if you wake up and we have a down markets, right? Don't be scared of that down move, how violent it can get. And I want to point your attention to this one white bar right here, right? First month is over. I want to pay attention to this white bar here of the last JPM collar. And these are the targets of the last JPM collar here, here, and there's one way lower down there, okay? So let's look in the past to the previous JPM collar, and we had some weakness down here, right? But it was bought right back up like it was nothing, right? And we had that continuation move higher into the end of the second month, okay? And we are in that second month currently right now, and we're right at that same place. You see that move down right here? I want to point your attention to this same thing right here, okay? Let me see if I can get rid of some of this stuff. So just so I can get rid of this, make sure you guys can understand where I'm coming from and get rid of some of this crap here. Okay, so we got this nice, right, come right into the first part of this month, right, bounce right off. And what are we doing? We're off and running, right? We actually slam into the top of that JPM collar, right? Get above it and hold it right into the end of end of that quarter. And we're at that inflection point right now. I want you to see this because, let me see if I can bring this down. I want you to see this, this inflection point right here, right? Came down on this inflection point and nope, got bought right back up like nobody's business, right? Slam right up into that top end of that collar. It's like a magnet. And we actually ended up pinning into it into the end of that quarter. And right up here, we've got this next one right here. Right, we're at that same inflection point right at the beginning of the month. It's now the 8th of August, and it's kind of do or die for the market here. And this is what I really want to point out to you is if the market does not reverse quickly, right, to begin to attempt to trade the end of the quarter on the top end of this JPM collar, because this acts as an attractor, believe it or not. It's like a magnet. It's like a tractor beam. This JPM collar. It's like, believe it or not, it's like a tractor beam. And if we can get up here, right, we can usually get above it and then slam down into end of quarter, something like this. Now, if we begin to have a continuation of the downside, you're going to get a magnet down into end of month to this JPM collar and a pinning action to this. Sometimes we can actually come down, but this will act as a not as a magnet, but as a pushing away force. The market will attempt actually to push us up and back into the middle of this market for September 29th. So this is this 4210 long puts, right? Coming into September. So you're at this point right now in the collar where we're not quite attracted to either, are we? We're not quite there yet to the downside, and we're not quite there yet to the upside. But I am going to have a price. We have a price target of 432, 428. So into end of quarter, if we do begin to reject off this daily trigger, we have right now a target of 428, 432. The actual target should be roughly that 4210 on the collar down here. So keep this on your plate here for the rest of the quarter. This will act as a magnet if we begin to slip and reject that daily trigger. Let me see what some of you guys are asking right now. Let me see what you guys are saying. I just see you guys have a bunch of questions here. 359 or so downturn within next trading days. Yeah, I'm on the surge for next week. I don't think I got to talk to both sellers and buyers here. It's usually the S&P 500 is way more resilient than tech. Let's start with that. And spec growth. S&P 500 is very resilient. And you can see that right now versus NQ, right? We'll look at NQ here in just a moment. But just be aware that you should see at least one more like death bulls. Like when you're selling, right? It's hard to sell a bull. Even if we are going to sell this, you're gonna see like one more death throw to the upside before bulls get drowned. We talk about it here all the time, right? That when you're trying to sell a bull, you get these monster squeezes to the upside, and you have to slam them back down again, right? And so I'm going to expect at least one more surge this week. And we're going to go through some of the sectors right now, take a look at that stuff. We're going to go through some cycle rotation stuff as well. I'm going to show you guys some PPOs, PPMs, sector rotation stuff right now, and some good stuff for the bulls. But just a note to this, I want you to be aware of this, that if there is that rejection on that daily trigger, watch out. So right here, I'm going to switch over here. This is like a key thing here for bulls and bears. Bears are looking for that rejection on Monday here. Like slam it down, stand underneath the daily trigger, get the hourly rolling down, all that kind of stuff. And bears are doing it. Thursday was the day when we came back down that hourly trigger and we lost that hourly trigger. It was gone for bulls. Bulls have lost their will to go to the upside. Now, saying that really quick here. Hold on a second here. Saying that really quick. XLF, right? When I'm looking at XLF here, XLF on a daily chart is looking pretty bullish here, right? This is not showing a weak market here. I always like to see XLF. This is a daily chart right now in XLF. The XLF chart looks fine. We'll look at Dr. If we have time, we'll get to Dr. Copper and we'll get to because XLK looks like dog shit. We'll look at XLK and XLC here in a moment too. But let's look at XLF. If we are having these pullbacks, I'm expecting XLF to look as bearish as SPY, right, on this pullback. We'll look at it here as well. Like the underlying health of the markets, XLF is looking pretty strong here. I want you to see this here. XLF has bounced off of its daily trigger. It's confirmed once. It's confirmed twice. Price is above the hourly, the half hour, the daily, and this is showing the underside. Eva Bricks Toys releasing there. We could replace the dollar currency plan. Yeah, I'm not. I'm more focused on. So do you guys understand the JPM collar? Do you guys have an understanding of? Do you guys want me to go over that briefly with you so that you can a basic understanding for you? I know that people use big words with the JPM collar. Do you want me to go over that briefly in this? Do you want me to go over how the market actually runs, whether you know it or not? I can if you want. Let me know in the chat if anyone here is mystified by how the JPM collar works. Let me know and I'll try to spend 10 minutes on it. I don't have to, but I can. You think it's just a rotation from tech into financials? Well, I'm going to tell you this. Like Dr. Copper can tell you some stuff. XLK, XLC can tell you if there's risk on in the market or not. But the underlying health of the market, I assure you, is financials. If you start to see financials ripping, blasting down, getting ugly in financials, the market is sure to. The market at all is sure to follow. And XLF to me is extremely bullish here. So even though we're saying we could correct or we could trade 432, I'm like but there's some other sectors out there that are saying, wait a minute, we're not done here. You're mystified by everything Jamie Dog says. So let me see if I can get this. Now, I usually write this down before I talk about it, but let's talk about the collar really quick. So why the collar actually does matter. See if I can get this out really quick so that you can understand them or demystify it for you. I'll be quick. I'll be really quick. Okay, so you have let me see if I might have my numbers wrong right now, but let me see if I can type this out. Let me just explain it to you. So you have about 35% of the market is retail, and about I want to say 35% is retail. 9 to 12% of it is dealers. So now you're up to what, 45-50%. You've got some individual big players, banks, institutions, and funds that are about somewhere between, what I've been told is somewhere between 35 and 55%, depending on who's in the pool and who's in and out of the pool in the marketplace at any time. So If you're one of the bigger players, if you're like a BlackRock, when supposedly BlackRock and State Street own 80% of the market, believe it or not, at any one time, right? State Street, BlackRock, and I don't think JPM's even smaller than those guys. But basically, big banks, right, own the market. Now, saying that, right, these medium-sized banks, let's call them, and you've got like the 6 eyes, the 7 eyes. Those are the guys. Those are like the bond vigilantes. Those kind of guys. They can actually do damage in the marketplace. But generally speaking, you have these different entities in the marketplace. If you don't understand this stuff, basically you've got banks, you've got dealers, and you've got retailers. Basically, there's different kinds of groups within that, but you need to know that. And you'll hear things like real money selling and real money buying. When you hear that, right, it's referring to these large positional players, mostly banks. If they're selling or buying, they can force price. So where price goes can be the determination of price can be determined by the largest players in the pool, right? If I'm doing all the buying and driving the price up, if people know that I'm buying, if it becomes public that I'm buying, prices will get driven up. If they find out that I'm selling and I'm a major player, prices will go down, right? Whenever I'm done doing those things, whenever me as a large player is done, the market can kind of do whatever it wants to do. And that's usually where retailers step in. And so retailers will step in, and they're mostly bullish. They'll mostly drive the market up, generally speaking, unless you change their sentiment to bearish. Like if you create sentiment to the downside, you'll get an amplification effect. If I'm a larger player selling, I'll have retailers join me. I can do that by changing sentiment by going on CNBC, going to Bloomberg News, all that kind of stuff. So when you hear that stuff, there's an impact on that. When I'm real money selling and I can impact retailers doing that, I can control the market, and I can also overrun dealers. Now, if I'm a big player and I'm not buying or selling, dealers take over with retailers. And if retailers are buying and selling, usually dealers will have an impact on those retailers. You'll see them counter hedging whatever the sentiment is of small money pushing the market around. And sometimes they'll actually chase. Dealers will end up having to chase if larger players in the market are found out to be buying or selling, right? Rather than delta hedging against that trade, they end up having to follow that trade, and they can amplify a move lower. Now, we know these things, right? Now, a bank doesn't even like that. They don't like that. Banks don't like price discovery in the marketplace. So banks put their fingers on the marketplace secretly in the background, and they do it with collars. They do it with more than just collars. There are other strategies that are actually better to use, but a lot of these big players, what they're trying to do is kill vol in the marketplace, up or down. So they have a secondary effect on the market when they're not buying or selling, and a lot of that is through hedging. So if you're a large bank, you don't want to tell your clients that you have wild returns, right? The market's going crazy up. I had a great month, then I had 2 bad months, then a great month, and 2 bad months. They don't like markets that are volatile. Generally speaking, banks like markets that trade sideways and up with pullbacks every once, or major pullbacks once or twice a year, some volatility. Let's call it 3 times max in a year. And then a major pullback over time, and then start the process all over again, right, to the upside. So if I'm a bank and I have if I have institutional clients, if I've got clients all around the world, and I say to myself, what am I going to do to stop price volatility once I'm done buying or selling this market? I'm going to hedge it. And not only am I going to hedge it, but other smaller institutions, smaller players, and some of retail are going to follow that hedging of the marketplace, because there's a belief that we're going to go to those numbers. So what happens is when they put this hedging on the market, it actually limits volatility, or the thesis is that it limits volatility in the marketplace. So when we have a hedge in the market, it tends to stop us from going too high, right? Crazy high. This is the top here, right? And crazy low to the downside. Kind of limits our trading range where we should be trading. Now, can they get run over? Absolutely. Have they ever been run over? Absolutely, they have. But normally not. And normally they are able to actually control how much upside we have and how much downside potential there is to the marketplace. And so it's like a second or third layer, I guess, on price discovery. So as we're trading, when you see me say things like, hey, I want to see where the collar is, what the expectations are, we haven't hit our collar yet, have we? We have not tagged this upside to the collar here. And the expectation is that we were magneting up here, right? We're repelling off of it, but then also we magnet off it to some point as well. And so I'm going to expect that we still go up there at this point, that we can still go up there at this point. And furthermore, if we don't begin to regain this level here, this 44887, we are actually going to magnet to the downside and fill these long puts down here for JPM. And I'll tell you what, I want you guys to know something out there. If JPM does not care about next quarter, they don't care about springtime, June, July, they care about the quarter. And they would like nothing less than for us to trade this 4210, I believe that's 4210, into end of quarter. JPM loves like this nice up move, come down, nice up move, come down. They love this action. And it gives it, what it does is they can then sell their products to their investors and say, hey, look, for 12 months, we had 10 great months. We had 2 bad months, and we hedged appropriately, and we got paid on those 2 months as well. Come back, stay with us. We'll give you consistent returns. We get to manage your money, collect all of those fees, and the market will move forward and down the road over time. Every once in a while, we'll have a hiccup. We'll have something unknown to the marketplace, but there's nothing we can do about that, right? We got some kind of terrorist attack, or we got some kind of, I don't fucking know, something bad happens, or we blow some shit up, or we raped and pillaged the banks and the market crashed. We hedged that too, by the way. And oh, by the way, we also have insurance on real market crashes. They actually do. That was implemented after 1987. So they're protected no matter what, right? Banks are protected no matter what. And they want nothing more than to see us come down here and buy another bottom down here, right? Just for end of year for Q4 into December, and try to bring it back up again, bring it back down, and bring it back up again. So that's how it goes. So when you hear people talk, and that's the other part about gamma too. We're not going to get into gamma today, but gamma is negative right now, and it's not a good thing to see negative gamma. We'll start to sell the rips. Yeah, so just so you guys know, that has more to do with dealers, but gamma can be overrun any day of the week. People don't understand this. Why I love gamma, but if you get real money buying, real money selling, your gamma goes right out the fucking door because the banks have stepped in. The dealers and the positioning of the market matter only when the banks are not buying or selling. If you're a gamma trader out there, tell me you know this, because I see gamma traders that don't know this. Not all, but a good proportion of them are saying, sometimes go on and say, well, gamma told me this was going to happen, it didn't happen. And I'm like, that's because the fucking banks came out and they were buying and selling. They run over all of that like it means nothing. You wind up chasing, right? You wind up chasing that real money buying and selling by major banks. Got to be careful what I say here. I'm concerned that financials might be over the skis a little bit into next year. Lots of buybacks going on around the bank system concerns. Yeah, so for myself, right, just to be clear with you guys, I'm still on. I want to see this rejection this week. I don't see a major pullback until September, October, though time is ticking, right? We're at August 12th, right? So today is August 12th. We're going into the 13th. Bulls don't have a lot of time into that time period. As this clock ticks, right, as time passes, that window of opportunity for bulls to take this market higher starts to wane, and you'll begin to actually see that sideways and down market into that seasonal weakness of September and October. That's what we'll end up seeing. So right now, I mean, for bulls, it's do or die here. You don't have a lot of time on the boards to be pushing higher. You got like a week. That's it. That's basically all you got to be moving higher. Yeah, I love GEX. I love GEX. I love Gamma. I'm a Gamma and GEX trader. It gives me good market awareness where we are. But the moment that real money buying and selling starts, that shit goes right out the fucking window. So I mean, it can amplify the. Let's say we're at negative Gamma, if they were selling, yeah, it amplifies the move down. But if they start buying in negative Gamma, that shit's out the window, right? We get the reversal. We're heading higher. So, anyways, the point here is this: bulls don't have a lot left here. They don't have a ton on their side. It's do or die for them into the end of Q3. So we've got about a month and a half left here, and it's not a coincidence that we're at August 12th. We got 2 or 3 days until we're at that midway point. We're at a big inflection point for bulls. XLF saying one story. XLK, right? This is the technology sector. This is a little bit different story here, right? This is flashing bearish. You can see there's a daily chart on XLK, where XLF is saying, hey, everything is fine. XLK is saying, nope, everything's not fine. We want that confirmation here. You've got that indecision green spinning top right there. There's an indecision candle here if it's going up or down. If on Monday we get that rejection on XLK, you're going to feel it in S&P 500. XLC. Let's take a look at that really quick. We're gonna bounce around some sectors really quick. This is the communications sector. This one's looking healthy, believe it or not. XLC, XLK are pairs. So right now, XLC is saying everything is okay. We're going to look back over here on the triggers and take a look at XLK and see what this looks like on triggers, right? And what is this confirming? More downside to come, right? XLK, NASDAQ. Not looking healthy right now. NASDAQ, even if NASDAQ squeezes on Monday, right? Still, that consolidation, the bulls need this right here. They need the squeeze on Monday, the consolidation, and a reversal to the upside. You see that? Bulls need this into end of quarter right here. They need this ramp. If at any point they get a rejection, I'm going to give you some hard numbers here. I want you to pay attention to this. If you see 170 get rejected on XLK next week and it starts heading lower, it's going to confirm that the entire market is heading down. You'll end up seeing a trade from 170 down to 200. Excuse me, not 200. Excuse me, 159, 160. Let's call it by the time we get there. So 170 to 160 on XLK. We're also going to take a look at VIX really quick, and we're going to look at Dixie really quick. So Dixie is kind of lying right now. This is a daily chart on Dixie. If you look at Dixie, we know where known sellers are. We know they were right here, right? These are where known sellers are, and they're being tested and probed right now. This is not a good sign. This is showing, hold on here, showing a further upside move to Dixie. And I want to, I don't have it on a different chart. Hold on here. Anything over 105, okay, is bear town. Like, this is bloodbath town up here. So if you begin to see Dixie move its way up here, right, and trade this 105, that would be the corrective move for SPX down to 428, 432. You would see that move higher. Anything above 105, right, and you can kiss 428 and 432 goodbye. Now, this chart on a daily is somewhat lying. On a 4-hour chart, it looks kind of bullish here, right? It's trying to smash above 1, 2, and 3. Not looking too healthy for the bulls, but there's a slight roll here on the hourly chart to the downside. So just on Friday's close, this is kind of mirroring that idea that we get the blast up on Monday open, but watch your asses for that upside move. for Monday. So Dixie on Monday, pay attention to it. You don't want to see Dixie get rebought at 102.66. Pay attention to this on Monday. This pullback here would signal a move up on the S&P 500. But if this does hold here, and we start ripping off this to the upside, you would see that failure on 472, I believe, on SPOOs. Let me make sure I get that number right on SPOOs. Let's see, 447. You would see the rejection on 447 on SPOOs on Monday. And you'd see the dip buy on Dixie on Monday. Now, VIX has the same problem right here. VIX on Friday's close is showing the upside move for, this is a 5-minute or 1 hour chart, is showing an upside or a downside move for VIX for Monday as well. But if that gets bought to the downside there, looking ahead on a 4-hour chart, excuse me, a daily chart, if this begins to roll down, right, close all these gaps down here, and bounces back up and starts to come higher, right, you start to see that bloodbath on Monday, and then we start to curve up here and try to take out any of this stuff up here, this $30 or whatever. You're gonna see some major downside moves. This is March, by the way. You actually have that. You actually have the next one right here is where you tag, and you get a break. Then it would be like this in October, November. So this would actually be October into November. That much larger move up and higher onto the VIX. So it is imperative for you coming into early next week to see the price action on the S&P 500 based on Dixie VIX, XLK, XLC, and XLF. HYG looking bearish here, or bullish here, excuse me, right? So we've got HYG looking bullish. So this is counter to what people are saying. XLF is counter to what people are saying. The indecision that we're in S&P 500. HYG is saying, nope, the move is to the upside. We're going to clear out all this stuff back here at 76.40. We're going to continue up and clear out everything at 79.64. Nothing bearish in the daily there. On the 4-hour chart, indecision still, right? This is an indecision. Coiling. We're going to make a move. We're going to make a move. We're going to make a move. Still no move in HYG. Just so you know, XLF is up, right? Or XLF is still up right now, right? So it's not showing risk-off behavior yet. HYG, not showing risk-off behavior either yet. Still showing indecision if it becomes risk-off. And I want you to know that this week, like as we come into the 15th, we're going to find out. We're going to find out. You'll start to see some violent moves, and if this become more of a leading indicator if it's up or down. Right now, it's showing up. HYG is a great leading indicator in the market. So far, HYG, XLF, both showing not a risk-off environment so far for the S&P 500. Yeah, exactly. So exactly. So XLF HYG is claiming we're going up, right? We're not up. Well, I guess HYG on Friday. What are they saying? They're saying up, right? So here's here's the HYG on Friday. Even though price was down into that close, these 4-hour bars here saying up, right? Up to the upside, and not to be concerned as of yet. Even if price is not showing on the S&P 500. We're also going to take a look here on NQ. E-mini. Bearish, right? Couldn't get up over here. Rejected up over here on the 10th. And I think it was John H. saying he wants to see the squeeze on Monday on NQ. In the overnight on Sunday, you want to pay attention to 15160.75. If you're trying to take a long on Sunday futures, you want to be exiting right around 15160. Next trade for you if you're a bull is up here to 15320. And if we bounce around in here, I'm gonna tell the bulls that all hope is not lost yet for them. That's what I say on Dixie. They're gonna roll. I see the like Dixie on a daily looks bullish as fuck, but on like a 15-minute, 1 hour, on a 1 minute chart, on a except for the 4 hour, it looks bearish. And VIX looks bearish too, so it's the downside on VIX. So Sunday futures, I'm hoping for that nice clean pop. So tech right now, what is it showing us for at the S&P 500? It is showing us some kind of a consolidation phase. If it can hold itself up, you'll see a consolidation, maybe a squeeze higher on Monday. Then look, if you're a bull, you want to see if NASDAQ can continue to consolidate to the upside. Now, I'm going to do something here in the background. You guys ask some questions. I got to do something really quick here in the background. And I want to show you guys a couple more things really quick before we wrap this up. In just 1 second here. Give me just 1 second here. Bring this up here. This is SPX on a daily chart. I want to show you one last thing here. 4 zigzag channels. I'm going to show you 4 quick things here. And I want you to see 4 quick things. SPX. You've got an extreme downside move here for SPX of 430, 4335, 432. I want you to just see that if you can't see this at home, there's a blue line right here. If you get this squeeze up and then the rejection down, you're still on uptrend, even if this 432 gets bought. And maybe you have a rejection over here. This is October, sometime in October. If this dip gets bought down here at 432. So I do want you to see that if you are a bull out there, we are still in the uptrend. We are at the midway point of the uptrend. Downside move for bulls. A lot of bulls out there want to buy that 432, 4320, somewhere in there, 428 to the downside. And you are seeing a little bit of a curve up on market breadth. So I want you to take your attention right here. And even though price is not following, I want you to pay attention to market breadth starting to curl up. I want you to pay attention to that. I also want you to pay attention to what looks like a slight attempt to pull back up here on PMO. And we also have the 0 line coming into play right now on PPO. So we're going to see if there's a reaction trade down here. Watch this right here. If we can regain and cross down below, if this is peaking out, if PPO is peaking out, and then if we get some kind of the same kind of reaction trade here, you're actually already starting to see it in market breadth to the upside right here. So this is kind of like the do or die, right? PPO, PMO, market breadth, and zigzag channels are all saying this is kind of it right here. Inflection moment is here for bulls, and you'll probably see that confirmation by Wednesday of this week if we have further downside. So then go to a Weeble chart. Just come back here to SPY. After hours 14. And by the way, if you don't know this already, I am on calls for the 19th or 21st of September. And then I've got a whole mess of calls, I believe, for next Friday as well. So if you're wondering what my take is on next week, I'm on that bounce trade for next week myself. And we're going to look at, give me one quick second here. One quick second here. $447.50 right up in here. So you got Monday, Tuesday, Wednesday, Thursday, Friday. We're going to call this inflection week for the S&P 500. Do or die for the bulls. You guys can snip this and take this home. Let me see, edit this. Do or die. For the bulls. $446.01. If you are a bear out there for next week, you're just looking for a confirmation to the downside at this point, targeting 432. You'll likely get 440 by Friday. 440.97 would be the price target for next Friday. Friday PT down here at 440.39. You have another target down here, 438, 437. I guess I'll put the nastiest down here. Save. So here's your price target for next week, 440.39 and 437.49. If at any point this week you see any kind of rejection or confirmation of the downside here, I'm going to be targeting this into Friday. This is an inflection week for SPY. So on the open on SPY on Monday, I'm going to look for 447.50 on the open, at least 447.50 by the open, if not the close of day on Monday. And then a fight here, major fight taking place for bulls and bears. I am on calls for next week for 459. So if you want to know what I think happens next week, I think it's massive upside we're headed. I think we're going right back to that scene of the crime next week. But, you know, I got to put my money where my mouth is, what I think is going to happen. So yeah, I haven't said anything on Tesla. I'm still looking for that downside move on Tesla. I'm still not happy with Tesla. We can look at that, though, right now if you want. Yeah, TLT I can look at as well. Well, give me 1 second here. I got a call coming in. Give me 1 second here. So expectations for next week, okay? This is do or die for bulls. I don't care what the market says. I don't care what the sectors say. I do to an extent. XLF, Dixie, there's some other things out there that are saying maybe there's a little bit more downside to tech or consolidation in tech. If we get the consolidation in tech and S&P 500 can continue up and to the right, if tech starts to reject and slam and starts trading below, it's going to get nasty. So we're going to pay attention closely to tech next week to see if they can recover, consolidate for that leg higher and end of quarter. We're going to also be paying attention to what the bulls do here. Bulls have no choice here. It's like no choice. You get that rejection on that daily trigger, and it is going to be on like Donkey Kong, I assure you. They tee off on this here on Monday. Look the fuck out. You'll be seeing, I'm assuming, well, I don't know about you guys, but I'll probably put a major hedge on the market if there's any kind of rejection up here. So this is what you're looking for. Just like on the flip side of this, the bulls, same kind of an idea. If that thing rejects, right? It's going to get nasty. So let me go back to, I'm going to take a look at Tesla for you, Apple, and NVDA. I'll do some Fangman stuff if you want. So just right up in here, if you want to snip this right here, you know, all this is saying up, right? Higher low and hourly, higher low and hourly, higher low and hourly, higher low, right? We're at the zero line here. Maybe another bump down or two, something like that. Not opposed to like one more down day or so, but You really are looking for this right here. Like this is going to be your oh shit moment if you're a bull. And get out of the way here. If we go up here, I'll be with you on this stream. For this stream, I'll be here with you. There's no way I'm gonna let you trade that alone. So, because I saw on Thursday and Friday, some of you were like, "I bought this and I bought that, and why is it going down?" And I'm like, "You got to see it like reverse to the upside." It's like Monday and Tuesday, I'll be here with you. There's no way you're gonna trade this alone without me here. And you're gonna let the algorithms take over if we begin to trade above it. We'll take that trade too. If it reverses down for the test down on the daily again, we'll look to see if it holds and the hourly comes up here, and we can take that one more time and make some major new highs. We're gonna look at Apple and Tesla. Well, it's not. For some reason, I'm tapping away here. Look at Tesla first. Tesla. Let's talk Tesla. You guys hear me all the time talk about Tesla. There's a few of you out there that I actually I text. There's a few bulls out there that I go, I'll send them a text and I'll say to them, "It's time to buy Tesla." And sometimes they listen to me and sometimes they don't. But they always know that when I text them, they're like, "Oh shit, it's time to buy Tesla. I've been long for a while now." So Tesla. Stock Tesla. It's almost at a buy point. It's at minus 20 right now. Has a little bit more to go. A little bit more to go. Tiny bit more to go. Whenever Tesla does this bottoming out and it's daily, so you got the higher low right there, higher low right here, and you're almost there on Tesla. Almost. So, let's talk about Tesla with what I just told you about NDX, right? I just showed you XLK, showed you XLC, XLK, but XLK more specifically. Here's my alarm before we do this. Watch that weekly's coming up. I want you to know that this is bullish right here. That crossing of the weekly over monthly is bullish. Still coming up, right? There's that, I showed you this a couple weeks ago, right? Showed you that green box and said, "Oh, it's going to get down to that 224, 232, somewhere in there." Almost there, right? Tagged 237. So let's just say you have a nice green day on Monday. Slam back down on the hourly trigger in the S&P 500, right? Start to consolidate. Then you get that push higher. Something like this happens, right? Hourly trigger comes up underneath, right? Somewhere in there, you're going to be looking for a dip buy down here on Tesla. As I said before, 232. You have that nice 1 week moment down here next week at some point. You get down to that 432, that sweet spot. Slam that buy button. If you're a Tesla bull, you're like, "Cap, we're not done going up. Cap, we're with you. We're going all-time highs. We're going to fail all-time highs, Cap." We'll go back to that right now, by the way. Then this is your time, right, to shine. I don't think it's Monday. I think it's like Tuesday or Wednesday is likely when Tesla has their real true dip buy. So just somewhere in here, if you're a Tesla bull, I want to show you guys this. I'm going to go back to something really quick. Hold on a second here. I want to go back to SPX. Why is Cap still bullish here? Let me show you why. So I want to show you this. So you figure we got, these are computers working too, right? Here's SPX. So that green box is right above that JPM collar, right? You figure we got Q3 and Q4, right? Q3, Q4. So all's not lost here, right? Just look at this quarter right here. This quarter's the same. Nothing's changed. Nothing has really changed. We're at an inflection point now. That's it. It's all that's changed. We're at an inflection point. As a matter of fact, if you were to look at the first week of May, and you go back to do a news search from like beginning of May to May 15th, and I bet you the news search was market crash, guaranteed. Market crash, guaranteed. That was the news. Now, the reason I'm directing your attention to this is because that JPM collar lines up with a failure of that high right there. Wouldn't it just be nice and clean and cute? You up there and into the thing, you get the failure on just before the previous high, right? You get your major correction in October, November, September, October, let's say. And you go, aha, bulls aren't getting their all-time highs here. And then you get that nice drive up into December. And there goes your all-time highs. There goes your, 4,700, 4,800. Everybody's high-fiving. It's Hanukkah. It's December. Everybody's doing the fist pumps. And you get all the bulls coming out saying, we're going to retest and go all the way up to 5,000 now. And that's actually where the failure is. We come back down in January, February. And Tesla's ripping face off into the end of the year. And you just see it here. And then, February, we actually get a real roll in February and come way down and trade that 4,000 somewhere down there. 4,200, 4,000. Bears will tell you 3,800. They want it right now. Bears are like, I want 3,800 in this roll right here. But I don't think we're done here. So I think we're done like here, like December 31st, right there. And then you get your January roll, death spiral roll. So Tesla, saying that to an extent, right? Tesla has the ability here to get bought sometime this week. I think this gets bought on Monday, but I think it comes back down one more time. You're going to get that NASDAQ consolidation and then finally the move higher for end of quarter. I know this probably says September here. But let's call that September 30th right there. And you get that big push up. You're going to get bears saying window dressing and all the other nonsense. You'll get Tesla actually trading like 400 or something. Okay, hold on a second here. Where's Rob? So Rob SFO, I'm going to make you a managing moderator. It's the highest thing you can be on YouTube. Though I have to make you an editor at some point, you and the rest of the guys, which is completely different than a managing moderator. Don't hit any fucking buttons, though. Don't hit any buttons unless you want to, like, add in, like, cap's not ugly or cap's not fat. You can, like, ban words like cap is fat, cap's got skinny arms, cap's got small feet, whatever it is. You can ban all that stuff you want, but. No, that is a Santa rally. So the idea here is, you guys want to see it. I'll show it to you right here. So this is end of quarter. This line right here that I'm clicking on, that's end of quarter. And then you've got end of year right here. There's the 31st, right? The idea here would be that you would get some kind of, if you want to know the path that we're thinking, the path is somewhere in here. I don't know if it's right here or right here, but some kind of a attempt at all-time highs. Failure of all-time highs. Trade down into, sorry, wait a minute, I got this wrong. Hold on a second, it's all wrong. Hold on a second. I'm on the wrong time scale here. That's 2024. That's actually 5,000. Right. This chart's looking like shit. I don't know why it doesn't scale right. So this is December right here. So you would see the attempt at let me, before I even do that, show you where all-time highs is. This is all-time highs. So you would see the attempt. If bulls win, you're going to see an attempt for the failure of the one previous roll here for this quarter. Pullback here, probably a pretty major one. Let's call this 1030. Right about there. And then into December. This would be the expectation right here. Something like that. So there it is right there. This would actually be higher. You might see, bring this up a little bit. Yeah, somewhere right down in there. So you would see a leveling off of this average right here. You would see this average get picked up, push this up on a 2070 EMA, roll this bad boy over, slam down into 430. Then you would see the attempt for all-time highs into end of quarter of Q3. You'd wake up into January and February, and we would start bloodbathing it down. You're actually going to hit this target here. That would be 4,500, 4,600. You would actually begin to see us. This would be gone at that point. No, hold on here. That wouldn't be there. You would actually see the break here. And we would actually start heading much, much lower. You'd actually head down to the weekly, which would probably be right about here. And then the monthly, which would be way down here. You want those price targets now, I can give them to you. So we're going to, in my view, we're going to trade 48, 44, somewhere in there. 48, 44, 48, 50, let's call it. And then you would end up trading you would end up trading 48, 44, the upside target. Then you would end up trading, end up breaking below that 4,500. This is for New Year. You'd end up trading 4,300. Break below that, and your next target would be I think 420. And then your February low, it's not on this chart. I have to give it to you. In 1 second here, I'll do it somewhere else. Your downside target in February, it would be 3550. 3550. So SPOOs, let's see if I can put this on this chart here. So I'll leave this up for you guys. Let's go March. March 01. 3,500. Right there. Pretty fucking violent, right? Pretty fucking violent. Fucking, this is going to be a nasty. It's not going to be straight down. But you're going to likely see blast down there. Blast down there. Blast down there. That would be the worst of it. That would be the worst it could be. If you're looking for like the ugly, probably right there. That would be the worst it would get. Be a retest down here of that 3,500, and this would just make this would be your trough check, and then you're actually going to continue higher to 5,000 for 2024 up here. In 9 months, I would expect to see 35 something, in the worst case scenario. I would not be shocked to see us hold off at 4,000. Catalyst for that move, seasonal weakness, good enough for me. We'll wrap it up, and the other part about that move into next year is I think they sell spec growth into you. I think that the catalyst for this is like accumulation and distribution too. Like the macro stuff plays into this. There's some macro stuff that plays into this. You're likely going to see something about China in the beginning of the year. You're likely going to see, with structural issues with China, you're likely going to see some kind of a front running of a pausing of rates in May, June, sometime in there. So a front running of a pause turning into cuts, being front run. You're also, this is a recheck of our previous low to make sure we're going higher. there's also the accumulation distribution of profit. So you've got people that bought in October, and they're going to look to take profit. And they're going to look to tell bulls that there's higher to go, that they should stay long. And what they'll do is they'll cut spec growth heavily into end of year. They're going to cut that. They're going to cut probably. I think they're trying to. If I had to guess here, if I was the Fed, that they want to bring both economic cycles together. So we have two cycles right now. We've got the COVID cycle, and then we've got our normal economic cycle, business cycle, whatever you want to call it. And my thought here is that there's going to be an attempt by the Fed and the banks to try to, if you've got a sine wave that goes like this, and that's our economic cycle. Right now we have another one that's like this, and at some point they're going to want to bring them together and try to get them to trade together. And this is the action of the Fed. So Jerome Powell's talked about this recently in his last rate decision. There were reporters that said, "Don't you think you need to do more?" And Jerome Powell's point was, we are doing enough to try to kill this COVID cycle. Not quite kill it, but get it to stabilize with the regular economy. It's not so much that they're trying to just like murder it or anything, but you have our grander cycle here, and we've got this smaller cycle that's kind of fucking with the program, right? And they really want this cycle to kind of like come up and come down with the greater market. So he addressed this specifically in his last rate meeting, where he was like, "Look, we want the market to do its thing," and this is kind of a greater thesis too. I personally don't believe you're going to get a Fed that's overly accommodative, or they're going to try to get away from being overly accommodative, and they're going to also try to get away from over tightening, overly restrictive. They've made these statements consistently for the past year. If you listen closely and put all of the statements together, and specifically this last rate decision, he was very clear to these reporters, and it was shocking because the reporters were looking for that. Yeah, you've tightened to kill this COVID stuff, but what about the rest of the market? And I think that the Fed realizes and knows to a certain extent that they've done so much over and under tightening and loosening that volatility is on the rise. Like the market volatility is starting to go like this, and they have to be a little bit less, like easing and a little bit less restrictive on these top and bottom ends of volatility, and try to let the market run on its own and only step in when needed. And you saw that too with regional banks, and you're seeing it with removing liquidity from the. They're saying they're removing liquidity from the system, but they're actually not. They're providing it through Fed banks to prime banks to banks to buy the market. So there actually is liquidity in the market, believe it or not. But I think there's like a transition in what the Fed, or how the Fed is going to treat the market. I think it's on a greater scale. They're looking back on 2019 and 20, and then the run that we had into 2021, and then this rollover in 2022. And you can actually see it in how the time they spent in cutting this market. They spent all of 2021 cutting individual sectors. Then they spent 2022 trying to bring the indexes down and the big boys down. And, you got 2 years of cuts going on here. So it looks like the attempt here is to not only fight that COVID stuff, but stabilize the greater market to trade sideways and up over time. It's very similar to what happened in the 50s, 60s, and 70s. I don't know that they're going to be successful